Hello viewers. First up disclaimer, this is not a financial advice. I'm not a financial advisor. Please use your discretion when making investment decisions. Today let's talk about stocks which are debt free. I have identified 15 stocks which are debt free and I wanted to know if being debt free is a good thing and how does the market view and what is the most important parameter for a stock and how much of a weightage does being debt free help a stock and its performance and how important it is to the investors. So I have come up with 15 stocks and here is the list. Align Technology, Ansys Technology, Chipotle, Expeditors International of Washington, Facebook, FI Networks, Garmin, Intuitive Surgical, Skyworks Solutions, T. Rowe Price Group, SEI Investments Company, Amdocs Limited, Paychex Incorporated, Fitbit Incorporated, Monster Beverage Corporation. So these are the 15 stocks which have no debt. So basically what I did was I wanted to figure out comparatively how do these stocks perform and what are good buys and what are not at this point of time, how much of a weightage is it or how much of a influence does debt have on the current stock behavior in the market. I know it is not the only parameter which determines the stock price, but there are many more. But then I wanted to just see the primary factor as debt and see how are keeping that constant, how are the other parameters impacting these stocks. So I took these 15 stocks and then I tried to compare it on the chart, and here I see. This doesn't give me much of information. It just shows me like they're across the board, they're not the same behaviors. The shocks are different, so the curves are different, and it clearly tells me like, okay, that is one of the factors, but there are many more factors which impact their behavior. Market conditions, their sector, the conditions that they are subjected to, how are their future earnings, and what are the risks that they are exposed to, and so on, and and the sentiment, that is one of the major factors. So basically this is what I see. So but then what I did was I went back and I wanted to see various things that are there out there on the internet and see how they did. And based off that, I identified two stocks, Facebook and Skyworks. I'll tell you what I looked at. Market cap. So the biggest market cap was Facebook, and all of them are around $1 billion to 35. Oh, here we have $70 billion. So basically, Fitbit is 1.3 billion market cap. Intuitive Surgical is $65 billion. So based on that, I was looking at the P's. For Align Technologies 108, whereas for Facebook it is 25, for Skyworks Solutions it's 18, and uh, Fitbit doesn't have a PE. So basically, because there are no earnings, so not really earnings, but then they're not really making money. So because it is minus 1.5, so it's not available here. So then I looked at the price per book value and then looked at those, and then looked at the earnings per share and see what they were doing, and then was looking at current price ranges, how they are trading. Then I was looking at 1 year target. So and then I was seeing what are the analyst recommendations, because I wanted to see what the street was talking about these stocks. So here if we see that, and then I looked at 50-day moving average, 200-day moving average, YTD, year to date return, 2 year return, 5 year return, and then I wanted to see how this was coming out to be. So basically let's look at Let's look at the ones which are underperformers. The interesting part is none of these are recommended to sell. So everything is either hold or buy. So here Garmin and Expeditors International of Washington are said to be hold and underperform. So for Garmin, the 1 year price target is 63, and currently it's trading the range of $70. And for Expeditors Washington, it's been $70 is the price target. It's trading around $73, and they're saying hold it, and it's going to underperform. Um, the the return for the year are around 14% for EXPD, and for Garmin it is 17.5%. And given that return, I know it's doing okay, and 1 year return has also been good. So basically, this year it hasn't been doing well. Um, Dividend for Garmin is 3%. For EXPD, it's 1.9%. However, the analysts are saying that it's not going to perform well. So those are the ones which they're not asking you to sell, but they're saying underperform. Let's look at hold here. So FY Networks, Paychex, Fitbit, T Rowe Price. So basically, Fitbit and FI Networks don't have a dividend, but T Rowe Price and Paychex have dividends here. And their return for the year to date is 6.52 and 8.78, whereas for FI Networks it is 48.3%, and for 1 year it's 62.53, and over 5 years it's been only 107%. And when it comes to Fitbit, um, the stock price has been going down, and there's no return, but then whatever you invested is going down, is losing its value. But it's said to be a hold rating. Then look at buy to hold, buy and hold. Between buy and hold are Ansys, Chipotle, and SEI Investment Company. They are like the investment company gives you a 0.97% dividend, but its return has been negative so far for the year, whereas the others' return has been good, um, but it's between buy and hold, which is the price target for 1 year price target for Chipotle is around 471, and it's trading around that price and price range, and then the price target for Ansys is around 187.56, whereas it's trading between 182 and 187. Um, so basically, looking at this, um, we have all kinds of ratings here, and then let's look at what are the buy ratings. So out of this, we have Align Technology, which is like a buy, and it's currently trading at around $380, and then its target is like $411. For the Intuitive Surgical Company, it's around 569 is the target price, and it's trading around the same range. And Amdocs is trading around $66, and its price target is $74. That is more than 10%. And Monster Beverages is trading around $58, and $66 is its price target. And they are all buy. And and if you see, for most of them, like Monster Beverages, it's negative 7% year to date return. For uh, Skyworks, Skyworks Solutions, it's around minus 3%. For Facebook, it is minus 8% return. Whereas in Intuitive Surgical and Align Technologies have given good returns so far, and Amdocs is 1.4%. So basically, the expectation is that these stocks, Facebook and and Skyworks, Amdocs, and the Monster beverages will rebound, and that is what is being like deciphered by the analysts, and they think like it has a strong business model. Skyworks has a strong tie-up with Apple, and Apple sales are going to help Skyworks. Uh, that's one of the 40% of their sales come from Apple, and their track record is pretty good, debt-free. Um, and with 5G networks, they see huge potential for Skyworks. Facebook, Facebook has been overdone with all the privacy issues, their lower guidance, the the stock has been beat up real bad this year. But then, um, given their fundamentals, they'll do well. So basically, what I realized was most of these five stocks which have buy ratings are are are, are a recommendation for buy based on fundamentals and not current trends or the sentiment. Whereas all the others, I think the fundamentals are a problem. So basically, looking at this, if I take off the ones which don't really matter, I mean, for this, so Align Facebook, SIRG, SWKS, Docs. So these are the six companies we are talking about where Align Technologies has for year to date 73% going up, and ISRG is 51% like we have seen, whereas for this guy for Facebook it's minus 7%, and Monsanto is minus 10%. Sorry, Monster beverages, and for docs, Amdocs, it is minus 0.3%. So basically, looking at all this, I believe um, the um, the the fundamentals have a major role to play. And as far as technical analysis is concerned, um, both Skyworks and Facebook are below their 50-day and 200-day moving average, and I think they are going to definitely rebound, and return on these two stocks are going to be really high. So let's see what happens. I think being debt free by itself doesn't really help the stock, but the fundamentals are very important. And then if you want to really refine your search, you should probably look at the the moving averages. I'm not an expert, but this is what I'm assuming. So basically, I think Facebook and Skyworks solutions are going to really do well. Let's wait and see. So in conclusion, what I realized is being debt free uh, is good, but then that should not be your deciding factor for picking a stock. There are more important factors, but being debt free is not your top determining factor for a for a for a stock. So that's what I have realized. So I've looked at these 15 stocks. I think Facebook and Skyworks will do well. I mean, Align Technologies, Intuitive Surgical will also do well, but then I see these prices are too expensive. If the stocks were split and made available to more investors, then people, I mean, I would have liked it, but then at $569 and $411, I mean, at $350 and $500, it's way too expensive for somebody to invest, somebody like me. So yeah, I think Facebook and Skyworks. Let's wait and see what happens here. Thank you.